Welcome back, and joining me for a closer look at what's played out on the market scene today is Kearabilwe Nonyana from Scope Prime Africa. Thank you so much for your time, Kearabilwe. Lots to talk about, but really what stuck out for me today when I opened ShareNet is that the diversified miners, namely Glencore, South 32 and BHP, were under heavy pressure. And specifically for Glencore, that's not a new thing. A lot of people, even on Stockwatch, have been asking why so much pressure on Glencore when copper is actually at very good prices. I think the last time I checked, Glencore was down more than 5%. What's the major pain point here for these miners today?
I think, as you said, high-grade copper and copper have been seeing quite a resounding move for the past week and a half, actually. And you would have expected it to essentially flow into their price. I think last time we spoke about Rio Tinto as a stock pick. And I think these diversified miners at the moment are going through essentially what the market is viewing as a fear of recession. I read two reports from international banks that have put the probability closer to 50% that the U.S. economy will go into recession and drag the world economy into recession because of this global trade war. So moving into Liberation Day, as Donald Trump moves it, I think you're seeing quite fear from the market with risk assets at the moment. And if you're a price taker, you are at the top of the risk bucket.
Well, the miners that have been liberated are the gold miners. Of course, we had another record high for the price of gold earlier on. But just zooming in on those miners, Gold Fields, actually what's interesting is that they announced a potential bond offering. The company really saying that it has started engaging in investor calls. What does this pursuit of capital mean?
I think they're wanting to keep their powder dry more than anything else, and I can see why. I mean, they recently have been quite acquisitive.
Yes.
They just recently bought about 50% stake in Osiska mine out in Quebec in Canada. And I think at the moment what we're telling the market is that they're going to pay down the facility that enabled them to essentially buy that acquisition. So, I mean, the question you ask yourself at the moment is, this company is highly cash generative. I mean, when we forecast as a team, we're expecting them to generate close to $1.5 billion, meaning they essentially could pay for that facility from cash generated from operations. But because of the fact that Gold Road Resources, which they made a bid for about 37 odd billion in Australia, has just been rejected by its shareholders, I think they're looking to up the bid for that stock. So I think genuinely gold miners are doing well just purely because the gold price is doing well, and no matter where you're all in sustaining cost, it's not close to $3,000 at the moment.
Well, I figured that it might have something to do with the Gold Road, and we will, of course, be keeping a close eye on those developments. Well, sticking to miners, Merafe came out with an announcement today that they've revised how they disclosed their revenue. So really providing a clear breakdown of their revenue by region. I'm guessing this is something that the market welcomed because when I checked in morning trade, that share had bounced almost 4%. Is this just more transparency to give investors more insight?
I think it's just clarity in accounting policy. And being a person who has a background in accountancy, it is quite a painstaking experience reading through company financials because just difference in revenue recognition from different kinds of businesses. And I mean, the obscurity is what really makes it very difficult. I mean, I know some colleagues and clients who actually have the investment teams redo the financials from the start just to get some uniformity in that. So I think the market just liking a bit of clarity in accounting policy, and that's probably just it.
All right. Well, let's take a look at a company that services the mining industry, and that is AECI. Quite busy there, giving us updates on 2 disposals today. Are we seeing an acceleration in the company sharpening its strategy?
Oh, well, it is actually coming back to, it's not necessarily a sharpening of strategy, it's going back to the old roots of this business, which really, they want to streamline their business too in order to service the mining industry. And they in the past made acquisitions to try to diversify the portfolio, but I think it's aligning that strategy to focus on what you're really good at. But I think some of these acquisitions, the market has really known about it. It's just betting them down at the moment and getting them concluded and just coming to report to market. And essentially just good cash in bank accounts and just being deployed into the right areas where the management see a lot of value. So I think the market already knew about this more than anything else.
Indeed, back to basics, and sometimes that really is all you need to do. Quite an interesting one, and not a lot of people look at Mustek and Novus, but there's been quite an interesting deal that they have been trying to get over the line. Coming out and saying that the takeover regulation panel has changed its mind on its approval of Novus's firm intention to make a mandatory acquisition offer to the other shareholders of Mustek. Interestingly, I saw that Mustek's share price was up and Novus's share price was down. What's up with this confusion? And at this point, what are Novus's options as the acquirer?
I mean, as I said, it's quite small. We don't particularly follow it, but I just think it's just one of those things where it's just clarity in competition regulation, and I think South Africa goes through that a lot. Whether you're a small company or a big company, it's just it's understanding competition regulation, especially when you're in the position to do a corporate action. Not one I follow much, and not much that I can comment on both the stocks. But I think it's probably just that confusion that will probably also get me confused.
Well, another one that people don't follow now, they used to follow it before, back at its heyday, is Nampak. It's gone quite small. They released just now, I think at 4:30, a sense that the CEO, Phil Roux, who hasn't been there for a long time, has given notice, 6-month notice of his resignation. And it's quite interesting because, when the company had announced that it is embarking on a turnaround strategy, Phil Roux was actually seen as the perfect CEO, seeing that he's going to be cutting a lot of unnecessary things. His nickname is Phil the Knife. And I was actually noticing that the share didn't really move that much, seeming that maybe the markets aren't too bothered by it. Is this something on your radar?
No, I think that they came with the results and a great turnaround strategy out in December, and I think the market is fully priced in the impact of Phil Roux. I think at the moment he was the right guy for that company. As you said, it's a small company, but I follow Phil Roux more than anything else. I think he's an incredible CEO who came in looking for cost efficiencies as well as just going back to basic with it. Let's focus on profitability, revenue generation. I mean, in their last results, their revenue was up about 1%, but it's a turnaround in the loss that I think the market really liked in the previous results. I mean, they moved from a loss of 4 billion to a loss of just under 700, and that speaks to Phil Roux's great business acumen. And I think when he's tendered his resignation, he's probably just going to explore the great wild world of corporate. And I think any corporation will be good with Phil Roux at the helm. And I think he's an incredible CEO and has turned around a very difficult company to turn around.
Well, at least there is certainty. They did say that he is going to remain on the board and that they already have a new CEO that will be replacing him, that will, in the meantime, be going to the COO role. So he will work very closely with Phil during this transition period. I do think we are out of time, so let us go to your stock pick for today, Kearabilwe.
Yeah, my stock pick is actually just a trade idea more than anything else. It's essentially, I'm buying spot gold and selling the June 25 gold futures, and essentially just taking some profit in terms of the contango mathematics. I mean, there's about $40 in that price if you just hold those contracts to expiration. And that's just because of the fact that there's been massive buying by central reserves, by central banks of gold when there's so much geopolitical tension, especially in the Orient. So I just do believe that there's still going to be positivity in the gold price. But right now, taking no market exposure, just taking the carry from that trade.
Yeah, all right. Well, thank you so much for your time and for your insights there on what has moved our money today, Kearabilwe. That was Kearabilwe Nonyana from Scope Prime Africa.